Apple shares powering the Dow today following its earnings report. Our next guest, one of several analysts raising price targets for the stock. Toni Sacconaghi is the top-ranked sell-sider on Wall Street, joins us once again following earnings. Toni, you raised a price target today, but below where the stock's currently trading. Why? I guess you're pleased, but not that much.
Look, I think the risk-reward on Apple is pretty balanced at current levels. We have the stock relative to the market trading at about a 5-year high, and there's still a lot of uncertainty about next year. Apple's going to be coming out with probably only incrementally better iPhones, not a 5G iPhone. And so there's a real question about what the strength of next year will be. And with the stock trading at 5-year highs on a relative basis, our price target ends up being below where the stock's trading at.
Bigger installed base than they've ever had. Wearables and services, a Fortune 50. They seem to be doing the things they need to do to offset whatever iPhone weakness they may be having.
Yeah, I mean, kudos to Apple's management team for really developing the services opportunity. And that is the intrinsic tension in the stock, which is the iPhone is under pressure and services is doing really well. Now, this year, that nets out to revenues being down 4% and net income being down 10%. So the weakness in the iPhone is dominating. The question is, what's that steady state? Can services get big enough to sustainably drive revenue and profit growth going forward?
Do you think it can?
And I think it can. And a lot of it depends on the success of new services, because new services like particularly content will be lower margins. So we feel pretty confident in the top line growth in services. I'm not sure that services margin improvement will continue at the same rate, because you're going to be adding lower margin services. And services margin improvement has been important because hardware margins go down, and effectively services have been subsidizing that. So it is imperative that services margins also go up. I feel quite confident about services revenue growth continuing to grow at double digits. I'm not as confident that services margins will continue to grow at the same rate.
Even my friend in front of me, Steve Weiss, has been beaten into submission by Tim Cook. He bought the stock into the print. He bought the stock out of the print. Come on, Weiss.
It's true. I bought it in spite of Tim Cook, actually. And I disagree. I don't think they're doing such a great job. Services growth has actually slowed. It's gone from near 20% to 15% to this quarter 13%.
It's actually 18%.
It's actually
if you factor, no, well, it's 13%, but if you factor out some of the details they've got right now from the legal side of things, it's an 18% run.
I'm sorry, I don't deal with creative math. I deal with the facts that are in the 8K, which were there, and it shows that revenue was 10. I buy it because of fanboys like you, because
it has nothing to do with being a fanboy.
Nothing to do with being.
No, that's cool. Really he can be. I've only owned this the longest of any stock I've owned.
He's really.
I teed you up for Tony.
Here's why I bought it. I bought it because the 2020 launch of the 5G phones are going to be the biggest upgrade cycle we're ever going to see. And they've got to pass, as we've seen in prior quarters, as we saw when the 10 was launched, even though it was disappointing, there was a pass up until that occurred. So you're going to get a pass on this for the next year. Okay, this can be a phenomenal grower, but it's not because it's held back by management, because he hasn't had the vision to make acquisitions that Iger's made, that Zuckerberg
Tony just said kudos to Apple's management team.
Well, I think Tony misspoke.
Tony?
Or maybe he spoke.
No, he didn't.
He spoke right, but that's not the case. Look, the company has actually been
I'm going to let you
re-rated.
Finish, and I want Tony to respond.
The company has been re-rated. And you know why it's been re-rated? Despite growth in revenue and net income being flat to down over the last year, is because they bought back stock. So the PE has actually gone up on lower net income. That's not a company.
You have to have cash to buy back stock.
True. But what do you do with your cash? Do you buy an asset that grows, that offsets more so your declining margins in 50% of your business?
Let's hear from Tony.
Like Zuckerberg did and others did?
Tony?
Look, I think on the services side, they deserve credit. They've built a $45 billion annual run rate business. They continue to bring new services to marketplace, so the gaming and video services will begin over the next couple quarters. And they are growing steadily at double digits and pretty consistently. And so I think they deserve credit for that. I think to Steve's point, look, the product side has been disappointing. The level of innovation that we saw on the product side relative to history is much lower. Apple had blockbuster products every 2 or 3 years historically. Arguably, they really haven't had one in the last 5 or 6 years. Now, we could argue that AirPods are doing exceptionally well, and that is a promising market, and I think that was really highlighted by earnings last night. We estimate, the company didn't disclose this, that they probably grew 70%. It could be a run rate business of $7 or $8 billion a year right now. And the beauty of that product is it's cross-platform. It doesn't just work with iPhones, it works with Android phones. So the ability to penetrate a huge installed base could make that product sort of a real sleeper going forward in terms of its contribution to Apple.